Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, December the 12th, 2025. Let's get started. We will sort off by week. You can see silver up at the top of the list here by actually a long shot there. Silver 12.4% in the past week. Down the bottom, crude oil, which has been in a downtrend actually for quite some time. And again, just a reminder, you can stop your video player at any time for more information, but we've got the short, intermediate, and long-term trend on the screen here for all the big assets. Let's jump into this. All over the world here. So look at the bottom panel here. This is the percentage of stocks in stage 2 uptrends. What is a stage 2 uptrend? Essentially a market that is greater than the 200-day moving average. The 200-day average is rising. And I also use an extra flag that the 100 average is greater than the 200 average. And so what I'm showing here is that 95% of global stock index ETFs are in uptrends. That means broad-based rally, right? Broad-based. This is not a US market, a Toronto market. This is a broad-based global rally. Most securities and stocks are rising throughout the world. The rally is also broadening again here. If we look at the large, mid, and small cap advanced decline lines, you can see here we've made significant progress over the last couple of kind of weeks, certainly over the last several weeks at least. And again, this is positive. There's lots of things happening. There's lots of rotation happening. There are lots of opportunities happening in various sectors that are also happening. You can see here, Russell 1000, that is 1,000 companies. Bottom panel, we got the largest green bar there since earlier this year. And so what that means is we got more highs that are happening, right? So when stocks are going up, they're hitting 52-week highs, 1-year highs, versus stocks that are hitting lows. Market is in good shape. When we're sitting here with 10.4% of the market, that's over 100 stocks here just hit 52-week highs yesterday, and that is the highest number of 2025. More evidence of a stronger rally. Silver and gold certainly outperforming. This is the last quarter. The Toronto stock market has continued to outperform all year long here versus the US market. But you can see gold in the middle there. PHYS is a dual listed Sprott ETF that holds the physical, and the Sprott physical gold and silver, which also has silver in it at the top there. You can see the difference over the last quarter. You get 28.5% on the top end versus 17% for gold itself. So again, silver has really surged here recently. And again, the CEF has been an opportunity that definitely offers some of both, if you will. But again, significant outperformance over the course of the last 3 months versus the markets themselves. And more importantly, I mean, this goes back over the years, as we have also looked at before. Let's look at a few stocks here from the All in Sync pool. KLA Corp, that's one of the semiconductor stocks on the left. Caterpillar in the middle, with the going right along with the industrials. In fact, probably participating and certainly driving the industrials here to highs this week and yesterday. And then we got Google. These are just weekly uptrends. And again, there's lots of stocks and uptrends, but every stock that, from a trend following standpoint, that we invest in, it qualifies for what we call the In Sync universe, which is outperformance versus the US stock market on a 1, 2, 3, 4, 5, and 10-year time frame. And again, the more consistent, the better, right? We always have to think about volatility as investors, and what we want is a nice steady eddy kind of line from the lower left to the upper right, and that is certainly what these 3 stocks have been offering. I want to show a couple of ETFs here. I meant to plot them both on the same Toronto market. So the Toronto market in the bottom panel has actually been strong. It's been stronger than the US, and so these are relatives. But on the left side, we've got this CI Morningstar WXM in Toronto, and on the right side, we've got the mid caps at Toronto. Now, both of them, as you can see in the green circles in the top panels, made highs yesterday, and in the bottom panel, we've actually got relative highs yesterday as well. They're actually both making relative highs versus not only the US market, but the stronger Toronto market. And that's exactly what I think that an investor should want, right? When we can find absolute and relative trend strength, that is a way to outperform a market. And that is exactly what these 2 ETFs have continued to do. And that is good news. ETFs, I think, are very useful, very practical. They offered certainly opportunities to participate in various niches and areas and markets without necessarily having to have some stocks that you favor. And I think, again, certainly are something that we need to always pay attention to. Let's take a look at the 6th biggest stock this week. This is Broadcom. We did the same thing 3 months ago. They just reported earnings last night after the bell. Again, you can see my circles here. Last quarter, I should say. The stock rose 9.4%. Okay, before earnings, it was a $1.4 trillion market cap. Going into the close yesterday, we have a $1.9 trillion market cap. That's $500 billion has been added to this company alone. The stock is or was trading about 5.5% lower in the pre-market. I've drawn a horizontal line on where that line was Again, this is just a couple of hours ago before the market. So again, is it a change in trend? Certainly not at 5.4%. Could it become more significant? Of course it could. All stocks are certainly welcome to peak and to bottom without notice, and we will always gauge that accordingly. But again, this is a very large stock, a lot to do with the AI and data centers and everything to do with semiconductors. And so the bottom line is it's a big stock, and so let's keep an eye, because these stocks do have the opportunity to move and change sentiment in various sectors and industry groups. I also want to finish off here with TELUS, one of the telecom companies in Canada, hit 12-year lows yesterday. That is very, very ugly. The stock has got a dividend yield of about 9.3%. And while at first blush, I think a lot of people would say, oh, wow, 9.3%, that sounds great. A few years ago, you can see up at the top in the green circle about half the yield, about 4.8%. The problem is that when dividend yields rise, we have to understand that they're rising because price is falling, and that means investors are perceiving risk or concern. And so from this perspective, I would caution you to always understand that when a dividend yield rises precipitously and far above market rates, the reality is the dividend could very well be cut. And that is the worst thing that can happen, because essentially a dividend or income-oriented investor loses some of that yield that they've been counting on. You can see my comment here. This is how I tend to look at stocks. You've got to add up the dividends and you've got to add up the capital losses in this case. And so from this perspective, with the stock down 50% in the last 3 years, that's 10 years worth of dividends for the investor back in 2022. That does not sound like a very good investment to me. And again, it is a downtrend. It is lower highs and lower lows. When does it turn around? I don't know. It doesn't matter from this perspective. There are lots of stocks to invest in, and I would always encourage, if your portfolio is having troubles, you certainly want to invest in things that are actually rising. It makes the portfolio easier to rise itself. Let's finish off with Sector Watch. We'll take the gold stocks, continue to be up at the top of the list. You can see mostly green, green, green across the table here. The only area with red across the panel is actually the real estate area. And again, real estate is coming down, and certainly that makes sense in this stubborn rate environment, yield environment. And so from this perspective, we've got everything in between. We've got new sectors here hitting highs. I think both the industrials and financials in the US yesterday hit highs. That looks very constructive. So please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.